In this lesson of the VITA Basic Tax Law course, we will be learning about dependents. In our last lesson, we talked about filing status and how in order to use one of our two special statuses, head of household and qualifying surviving spouse, a taxpayer must have a qualifying dependent. In addition to head of household and qualifying surviving spouse, taxpayers using any of the other statuses might be able to claim dependents on their return. Let's talk more about how to determine who can be claimed. We are going to begin a bit circuitously with the term exemption. An exemption is a dollar amount that is deducted from total income, thereby reducing taxable income. And if you think back to the Form 1040 that we previewed in our Filing Basics lesson, remember that we had a section for deductions just before the first page ended with the taxable income line. Well, in tax years 2017 and earlier, there was a line for exemptions just before we got to that taxable income line. In late 2017, however, the Tax Cuts and Jobs Act reduced the dollar amount that would go on that line to zero for years 2018 through 2025. So you are not going to see that line on this year's form. It is still important to know what an exemption is, though, because even though the exemption amount is zero, the ability to claim an exemption can make taxpayers eligible for other tax benefits. So we need to talk about the two kinds of exemptions. We have personal exemptions and dependency exemptions. A personal exemption is claimed by the taxpayer, and if filing jointly, the spouse. If spouses are filing separately, they might each claim their own exemption, or it might be possible for one spouse to claim the other's exemption if the other spouse had no gross income. It is important to note, though, that a spouse is never a dependent of the other spouse. If the taxpayer and/or spouse can be claimed by somebody else as a dependent, they would not be able to claim the personal exemption. You can see here on the Form 1040 where the box would be checked if that were the case. This is important because if you remember, a dependent taxpayer has a different filing requirement and standard deduction amount than a non-dependent. And, as we will cover again later, a dependent cannot claim another person as a dependent. The dependency exemption can be claimed for two types of individuals: a qualifying child or a qualifying relative. And we are soon going to learn some tests that help us determine whether an individual is a qualifying child or a qualifying relative or neither of those. Before we do that, I just want you to look at this return and notice our dependents section. And you can see right there on the page where we put down the first and last names, the social security number, their relationship to the taxpayer. And then there's a couple of columns for what kind of credit this person might qualify for. And we'll cover more about those credits in a later lesson, but you can see where they show up. So what are the reasons somebody would want to claim another person on their return as a dependent? Well, there are tax benefits. As we already discussed, a dependent can help a taxpayer qualify for one of our two special filing statuses. It can also increase the amount of earned income credit that our taxpayer can qualify for. It qualifies the taxpayer to take credits like the child tax credit, the credit for other dependents, the credit for child and dependent care expenses, and it also allows them to exclude from income the amount their employer would have paid for dependent care benefits. And here is how we will get the information from our taxpayers regarding whether they can take personal exemptions or dependency exemptions. Question 10, which is just right above Part 2 of our 136.14c intake form, asks whether anyone can claim the taxpayer or the spouse as a dependent, and there's some little check boxes. They might mark unsure because this is specialized terminology. And so with what we've learned as volunteers, we can help them sort through whether or not anybody else might be able to claim them as a dependent. And then in Part 2, we see the grid there at the bottom. They can list everyone who lived with them for the last year and anyone that they might have supported, even if that person didn't live with them. And then there's some questions that they are to answer. And then, as we pointed out before, there's this little gray box there on the right. And those are questions that our preparers fill out because we have a little more training, or we will have very shortly, a little more training on how to answer these questions and what kinds of tests we would need to run through in order to help determine whether or not the taxpayer can claim that person as a dependent. This is the process we follow to determine if a person can be claimed by the taxpayer as a dependent, and if so, what type of qualifying person they are. First, we have 3 what I like to call pre-qualifying tests. If this potential dependent passes those, then we use 4 tests to see if they are a qualifying child. We do these tests first because it would provide the greatest tax benefit to the taxpayer to claim this person as a qualifying child. If they are a qualifying child, though, they might qualify for more than one taxpayer, in which case we would need to utilize the tiebreaker rules to see if our taxpayer gets the priority in claiming the child. If the potential dependent is not a qualifying child, then we just move on to the qualifying relative tests. If this person is not a qualifying child or a qualifying relative of the taxpayer, then they cannot be claimed on the return. Our 3 pre-qualifying tests are the dependent taxpayer test, the joint return test, and the citizen or resident test. Now, the dependent taxpayer test is actually not a test for our potential dependent, it's a test for our taxpayer. And as we talked about a few slides back, a taxpayer who is a dependent cannot claim a dependent. And this is fairly intuitive. If the taxpayer is not supporting themselves, it's unlikely that they are able to support another person. The joint return test says that if a person, our potential dependent now, files a joint return, the only reason why they could be filing that return is to get a refund of income tax that was withheld from their employer. They can't be filing because they are required to file, and they can't be filing to claim any other credits or tax benefits. The only reason that they would be filing that joint return is to get a refund of taxes that were withheld. And then there's the citizen or resident test. And again, we're focused on our potential dependent. They must be a U.S. citizen, a U.S. resident, a U.S. national, or a resident of Canada or Mexico in order to be claimed. If those first 3 tests did not rule out our potential dependent, then we move on to the qualifying child tests. And there are 4 of these: the relationship test, the age test, the residency test, and the support test. The relationship test says that this person that we're trying to claim is a son, daughter, stepchild, foster child, a brother, sister, a half-sibling, a step-sibling, or a descendant of any of these people. The age test says that this person must be younger than the taxpayer, which largely applies to siblings, and children are generally younger than their parents. And they must be under the age of 19. If they are not under the age of 19, they could be under the age of 24 if they are also a full-time student. So college students could still be claimed by their parents. There is also a residency test, and that says that this person that our taxpayer is trying to claim lived with the taxpayer for over half of the year. Now, another thing that's important to note, again, especially with college students, is that temporary absences don't disqualify. So a college student is considered to be only temporarily absent if they are away at college. Incarceration and kidnapping are another couple of situations that are considered temporary absences and not permanent. And then there is the support test. And this is really important because the support test for a child is slightly different than the support test for a qualifying relative. For the child, it is the child that does not provide more than half of their own support. If we get through those 4 tests and we find that this potential dependent is indeed a qualifying child of our taxpayer, we need to tread a little bit carefully because that qualifying child could be not just a qualifying child of our taxpayer, but of another taxpayer as well. And this can occur in situations where a child lives with their parent, but they also both live with the grandparents. It can also happen in situations where parents are living apart and filing separate returns. So our first tiebreaker rule says that the parent, or if parents are filing jointly, they get first claim on that dependency. If it's a contest between one parent and another parent, then our second tiebreaker rule says that the dependency goes to the parent who the child lived with the longest. And this is usually measured in nights spent with one parent or the other parent. We compare, and the one that had the most will get the dependency. If for whatever reason that it was just 50-50, then the dependency would go to the parent with the highest adjusted gross income. And then if neither parent could claim the child, say the child is, I don't know, a situation, maybe a child is living with an aunt for half of the year and lives with the grandparents for the other half of the year, then it would go to the person with the highest adjusted gross income. In that case, the child did not live with either of the parents for over 50% of the year, so the parents would not be able to claim that child. It would that child would be a dependent of whichever relative they lived with over 50% of the year, and if it's between two people, then it would be the person with the highest adjusted gross income. And then finally, if parents choose not to claim the child, then the person with the highest AGI, as long as that adjusted gross income is higher than the parents. And this is the one that we'll most commonly see where the child and their parent live with the grandparent. It's possible that if the grandparent is has the highest adjusted gross income and is really providing more than half of the household support and all of that, often the parent will choose not to claim the child so that the grandparent can claim that child and then file as head of household. So if we got through those 4 tests for a qualifying child and we determined that this person, this potential dependent, is not a qualifying child, then we move on to the qualifying relative tests. And there are 3 tests that we have: a relationship test, a gross income test, and then a support test. There are 2 ways that a potential dependent could qualify as a qualifying relative under the relationship test. They might have a specially recognized relationship to the taxpayer. So this might be a dependent child or a descendant, a child or a grandchild. It could also be a sibling and any of their descendants, so like nieces and nephews. It could be parents, it could be ancestors, so a grandparent and any of their siblings, like aunts and uncles. Half, step, and in-law relations also count. But it's important to note that cousins do not count under the special relationship test. The other way that we can use the relationship test is if this person lived with the taxpayer all year. So maybe they don't have a special relationship, but maybe they lived with the taxpayer for the entire year. In this way, a cousin could qualify. Or if it's not a cousin, it could be another completely unrelated individual, so long as they lived with the taxpayer, again, for the entire year. The next test would be the gross income test, and this is the test that throws a lot of dependency situations out. The person that we are trying to claim as a dependent must have a gross income of less than that small amount you see there on the slide for the entire year. If they made that amount or more, then they are not a qualifying relative. They cannot be claimed by our taxpayer. And then finally, we have our support test. Now remember, I said in the qualifying child test that the support test for a qualifying child and the support test for the qualifying relative are just a little bit different. So for a qualifying relative, it is the taxpayer who must have provided over half of the support. Or if there's a multiple support agreement, there are a little bit different rules, which we will cover here in just a minute. And as promised, here is how a multiple support agreement works. And this is often in the case where siblings are supporting a parent together. They have some sort of agreement where more than one sibling contributes toward the support of a parent. In this case, two or more people could claim this person as a qualifying relative except for the support test. So they pass the relationship test and they pass the gross income test. It's just that support test. If together those people provided over half of the support and the taxpayer, who's, looking to claim this person, contributed at least 10% of that, and they have a signed statement from all the others in this agreement that though they are not going to try to claim this qualifying relative in this year, then it is possible for our taxpayer to claim this person as a qualifying relative, and they would file with their return Form 2120, the Multiple Support Declaration. And last, before we leave, there are some special rules for divorced or separated parents who live apart. And these are parents who would be considered unmarried, so they are divorced and legally separated. In the case that they are together providing over half of the support and the child was in the custody of one of those parents for over half the year, so that was the custodial parent, if that custodial parent signs Form 8332 in accordance with their divorce decree, they can release the claim of the exemption of this child to the non-custodial parent. So this is how many divorced parents will allow one parent to claim the dependency in 1 year and the other parent to claim the dependency in another year. Now, if a parent has released the exemption to the non-custodial parent using Form 8332, the custodial parent could still use that child as a qualifying person to file as head of household even though the non-custodial parent is actually claiming the child on their return. And you can see a spot here up at the top of the 1040 where the parent would list that child's name because it wouldn't show up down in the dependents section. So they can list the child's name at the top of the 1040, and that is how the IRS would know that this parent is able to still file as head of household. And here are some resources to help you in determining whether or not a potential dependent can be claimed by our taxpayer. We have some tables that have some questions, and you run through the flow and the process, and it helps you know whether this person can be claimed by the taxpayer. And those can be found in Publication 4012 in Tab C. And additionally, there's a worksheet in there for determining support. And in this case, this is support of the person, not support of the household. So it's a different worksheet than we had in last time when we were discussing filing status. And then there's the interactive tax assistant on irs.gov. Whom may I claim as a dependent? Again, it will run you through some questions, and based on the answers to those questions, it will say whether or not this person is can be claimed as a dependent and what type of dependent they can be claimed as.